Hello out there in cryptocurrency land. Welcome back to Real Crypto. So I haven't done an update in a couple of days, and Bitcoin's done a little bit more. I took a day off the other day after I had our live stream. We kind of had this low put in here, just under 13,000. Bounced up quite nicely on some really good volume, and we've since put in this rising wedge pattern. Now this rising wedge pattern is technically a pattern that would result in a downside break. However, that's not always true with Bitcoin. Bitcoin likes to negate this rising wedge and actually break it to the upside. So I don't exactly know what we're going to do here, but here's your pattern, and a break one way or the other will kind of give you the direction. Now, something new to the chart that I've added is this declining channel that we found. A gentleman in my chat room, Crypto Crown, actually had me take a second look at the Bitcoin. He said he doesn't think the head and shoulders is quite going to play out. Asked me to revisit it, so I did revisit it. And I kind of came up with this declining channel here, and you have to draw this on the daily. You can't draw this on any lower time frame, and you have to go off of the closes. There's a bunch of spike lows here, but on the daily it seems fairly reasonable. Seems like a fairly reasonable declining channel. The angle is good. The volume is kind of more in line with a rising channel than it has been with a head and shoulders. So maybe we're in a, declining channel. So it looks like we're in this declining channel situation more than we're in this head and shoulders situation. I think it's still valid. It may still kind of play a little bit of a role in whatever downside action we have left. But I just want to explain to you a little bit about that rising channel and show you how I got to that. But right now we're sitting here in this rising wedge situation, right in the middle of this channel. We're smack dab in the middle of it, well, a little bit above it, so I guess here would be the middle. But if we go to the upside, if this does break to the upside, you want to see if this upper channel line holds as resistance. If this does hold as resistance, then we're definitely in a declining channel situation. If it doesn't and we blow past it, then I think we're more in a range bound situation. So these markets evolve, ladies and gentlemen. They're not if this were extraordinarily easy, everybody would do it. Everyone would know all of these rules, but very few people actually understand how to do this definitively. And people can say all they want. Oh, I saw this, I saw that, but we all oscillate back and forth between bullish and bearish, and I do as well. I know a lot of people that do, but the key here is this: no matter what pattern here prevails, this is a choppy market. Okay, this is a trendless, choppy market, and if you're noticing slow declines in your account as you trade, if you're noticing that you're not performing as well as you once were, it's because we're in a choppy market. During a choppy market, breakouts fail. During a choppy market, big pops and big drops happen. During a choppy market, you get situations like this in Bitcoin, where we have this very nice volume pop, this very nice singular volume pop with no continuation right here. Let's go down to the 15-minute. You can see this probably a little more clearly. All right, come on. So here's that. Okay, so here's that volume pop. A really good volume down here, kind of buying up these lows, and then just really a failure to buy anything. So here's one more volume pop, but you're not seeing the flurry of volume coming in. You're seeing little purchases here and there, little purchases here and there. You're not seeing big accumulation of Bitcoin. So that's what a choppy market does to you. It gets you excited with a big pop, and then it does nothing, and then it slowly sells off or slowly goes up, and then you probably take a small loss if you're actively trading these assets. So usually the best thing to do in this situation, if you're not a day trader but not a hodler, because there's a difference there, right? You can trade with different styles. Now, a hodler isn't going to care about any of this, and that's great. A day trader is going to make money off of most of these swings because he's going to be there to catch this move. So if you're a day trader, and if all you do is day trade Bitcoin, because keep in mind, you can do that. You can just sit here and day trade Bitcoin. Maybe he sees this bottoming action here and he buys it here, and then he sees a topping candle here and he sells it here. Then he waits for a declining trend line here to break, and then he buys it here. So there's opportunities to be had at most any time frame. The people that are going to get hurt the most during a choppy market are the guys that don't necessarily day trade and don't necessarily hodl. And I'm not sure how much of the population that is, but those are the guys that are going to get hurt. So if that's you, and that's actually me, that's how I trade. I don't really day trade like that, and I don't really hodl. I'm right in the middle there. I call it swing trading. People may have other terms for it, but I call it swing trading when you're not day trading, but you're going for like larger moves like this, okay? So those are the guys who are really going to get hurt in choppy markets. And the best thing you can do if you're a swing trader is to basically sit out, maybe have a couple of small positions testing the market, but very small percentages of your account, and just sit on the sidelines with cash, because guess what? When the bull market presents itself, you're going to be there ready, waiting, and you're not going to be exhausted or frustrated. And when you're exhausted and frustrated from this market chopping the crap out of you, you're not going to make sound decisions. So I've taken a couple of days off from the crypto markets, checked in once a day or so just to make sure I'm not missing out on any big fundamental moves. And other than that, I've got a couple of small positions, and I'm sitting in cash. I'm sitting in cash with the vast majority of my account. But that's just me. Everyone has their own trading strategy. So there you go. So there's a possibility that, one more thing I wanted to talk about, which is why this line is here. If we do break to the downside of this rising wedge, there's something called a measured move we can take, and I've talked about this a little bit, where you basically take the high of the move to the bottom of the move, and then you basically take that and then move it to where we're going to break down from whatever pattern we're in. It doesn't have to be a rising wedge. And that's going to kind of imply a possible downside target. None of these are written in stone. Measured moves don't always work, and sometimes they can be taken from different areas. It's not an exact science, so you can kind of think of it as a stopping point. If you're an Elliott wave guy, maybe like a 3-leg pattern, if you will. So leg 1, leg 2, leg 3. So this would kind of be, in a way, a measured move, and this also could be a possible measured move as well. So anyway, there's a little bit about where this line came from. So all right, ladies and gentlemen, there you go. Bitcoin in a rising wedge. We could go up, we could go down. Bitcoin likes to chop these around, and we'll just kind of have to see where we go from there. We're in a choppy market. Stay loose, stay limber. Don't be too heavily invested if you're not hodling or day trading, and go enjoy some sunshine, or it's winter in a lot of places, or go enjoy some snow. All right, ladies and gentlemen, thank you for joining me. I appreciate it. I will see you next time.